Good morning, this is Bloomberg Daybreak Europe. Happy Wednesday. I'm Tom Mackenzie in London. These are the stories that set your agenda. Budget day here in the UK. Chancellor Rachel Reeves set to present her highly anticipated tax and spend plans as she looks to placate both the bond markets and backbench lawmakers. Stay tuned for our special coverage. In pole position, National Economic Council Director Kevin Hassett emerges as the front-runner to be the next chair of the US Federal Reserve. Markets rally as traders ramp up Fed cut bets. And President Trump dispatches top negotiators for more high-level talks with both Russia and Ukraine and says there is no deadline for a peace deal. So decent gains overnight on Wall Street. Certainly there is optimism when those in the markets are betting on an increased rate cuts. And you're seeing almost 100% priced in for the month of December in the money markets, at least. And the news that Kevin Hassett is in pole position with those dovish views has accelerated those moves as well. Lifted the equity markets. You saw a rally in treasuries, the equity markets, the S&P 500 ending up 0.9%. You are set for a fourth straight day of gains for US stocks when you look at the futures picture, pointing high by 0.3% on the S&P E-minis. Nasdaq 100 futures looking to add 113 points. Here in Europe, the focus, of course, is going to be on the read across, given the upside we saw in the equity markets yesterday. You saw solid gains on Tuesday out of Europe. European futures looking to build on that, pointing high by 0.7%. Here in the UK, the FTSE 100 futures picture looking to add 23 points. Of course, the scrutiny will be on UK assets, not just equities, but of course, gilts in focus as well as the pound. Let's flip the board and look cross-asset, talking of which, of course, the pound. There have been these moves betting against the pound in the lead-up to this crucial budget, which will be announced at 12:30 p.m. UK time, of course. 131 right now on pound versus the dollar. Slightly higher in the session, up 0.2%. We'll see to what extent that changes and adjusts around the budget. The US benchmark 10-year rallied yesterday in the session, giving up some of that today, only modestly, but still just above that 4% line. Yields up just 1 basis point in the session today, again, after the rally that we saw yesterday. Gold at 4,161. The yellow metal getting a bid as well on rate cut expectations from the Fed, up 0.8%, and Brent remaining at around that 62 level, a little higher in the session, up 0.4%. So let's get to the details around the UK budget. The Chancellor, of course, Rachel Reeves, due to deliver her second budget in the House of Commons later today. Reeves knows that the much anticipated budget will need to placate both the MPs who've put Keir Starmer, the Prime Minister, of course, on notice, and the gilt holders who've been demanding a premium on UK debt.
Obviously, more headroom would be good, but there's always trade-offs because, of course, to build more headroom, you would have to increase taxes further or cut spending further. But we'll continue to manage that balancing act.
Well, in the build-up, the Chancellor made an unusual media intervention where she appeared to prepare the public for a hike in income tax, despite saying after her previous budget that it had, quote, wiped the slate clean.
It was a significant budget yesterday, but that budget wipes the slate clean so that we never have to do a budget like this again.
So can I take that, a confirmation, no tax rises for the rest of this Parliament?
Or no Chancellor is going to be able to tie their hands in that way. But there was a significant budget yesterday because we had to wipe the slate clean after the economic mismanagement, the chaos and the instability from the previous government. No government should have found themselves in the position that we did, having to clear up that mess. We've now done that and we can move on.
OK, so hearing from the Chancellor speaking, of course, back in 2024 and more recently. For bond traders, a key focus will be how much of a buffer Rachel Reeves creates against her fiscal rules. It was very slim the last time around, and whether it is enough to soothe those market concerns. Let's bring in Bloomberg's Lizzie Burden, who, of course, has spoken to the Chancellor a number of times and follows this story in great detail. Lizzie, Outline for us the challenging situation the UK Chancellor finds herself in.
Well, you framed it perfectly, Tom. She is caught between the bond vigilantes on the one hand and the left wing of the Labour Party on the other. This is the biggest test of Rachel Reeves' political career. We're expecting the Office for Budget Responsibility to say that UK borrowing is going to be £20 billion a year higher by the end of the decade than it had seen back in the spring. And that is going to wipe out the headroom that you said she had left, that razor-thin margin against her fiscal rules of £9.9 billion. So she needs to rebuild the public finances. And at first it looked like she was going to do that by appealing to the bond vigilantes, by breaking Labour's manifesto, raising income tax. But then, of course, as you say, we had that policy U-turn, and her officials have been briefing that we can actually expect a smorgasbord of smaller tax rises. So now we ask, how much headroom is she going to leave? It looks like it'll be about £15 billion. Is that going to be enough for the market? And already that will be politically painful. You'll remember when George Bush Sr. said, "Read my lips, no new taxes," and he broke that pledge. He was punished at the polls. You heard there the Chancellor saying, and she said it to the CBI, to business as well, she is not coming back with more borrowing or more taxes. Never before has Labour polled this badly. She is really in a bind if she does more.
What are the individual measures we can expect? What is likely, what is unlikely from this budget later today?
The single biggest measure on the tax front is likely to be a freeze on personal tax thresholds, a stealth tax rise. Politically, we're also expecting her to lift a mansion tax on £2 million homes and more. But that might appeal to the left wing of the party. It's not expected to raise as much as she would like to raise. There could be more sin taxes, gambling, alcohol, tobacco. But really interesting on the spending side, how much she is going to cut. Is she going to leave all of the revenue raising to tax rises and just be stuck in this doom loop of having to come back and back and back for more tax rises? It looks like she could lift the two-child cap on benefits, which would cost £3 billion. And if she backloads the spending cuts to the end of the decade, there will be questions in the markets, perhaps, about debt sustainability. So we, as you say, watch the bond market reaction to this. Liz Truss looms large over Rachel Reeves every time she has a fiscal event. And, of course, we watch the currency markets as well. There's been huge volatility in the pound-euro trade. And, as you say, you've seen the pound weaker against the dollar. You've seen the expectation that it'll be weaker against the dollar as a result of this budget. If Reeves can pull this off, you could see a relief rally for sterling.
Lizzie Burton, thank you very much indeed. Let's get more in terms of the market positioning around this UK budget. Later, by the way, we're going to be talking with 91's head of managed income on the gilt markets, of course, as Lizzie was saying, so central to what happens today. John Stopford with those views coming up. The chair of the UK House of Commons Treasury Committee, Meg Hiller, and CBI Chief Economist Louise Hellem. All of those interviews coming up on our programming. Do not miss those conversations in the run-up to this crunch budget. UK Chancellor Rachel Reeves, of course, will deliver that budget at 12:30 p.m. today in London. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. And it doesn't stop there. The opening trade will break down the numbers with key business and political voices in its budget special tomorrow morning. Let's get more on the market views right now. Bring in Bloomberg's MLive cross-asset strategist Ven Ram, who thinks deeply about the pound, gilts and the reaction function around UK policy in the lead-up to this budget. Ven, what for you are the top-line implications on both gilts and the pound? What is priced in? What are the risks?
Morning, Tom. I think that the pound has kind of weakened in recent weeks in reference to relative to its fair value. Investors have tacked on a significant risk premium to the pound since the end of September. It's now trading about 2.6% weaker than it ought to on the basis of my modelling. And therefore, I think that that risk premium is kind of quite evident. Now, Chancellor Rachel Reeves has quite a challenging task today to make sure that the risk premium is erased to at least some degree. But, you know, many of the measures that she's likely to outline or maybe inflationary, which may keep the BOE from cutting rates. Now, one of the measures we already know is the living wage, increase to the living wage, which is 4.1%, which is kind of inflationary. And it also stokes unemployment, the prospect of unemployment at the same rate. So I think that, it's going to be a very tricky act. I mean, how much of fiscal, how much of debt is she going to incur? Is she, the UK's UK's debt to GDP ratio is already 95%. So, but she can't borrow too much more. At the same time, she can't raise taxes because that's already backfired. So she's caught between a devil and the deep blue sea. So let's see how this goes, but there's going to be a significant demand from traders to keep that risk premium on gilts and the pound.
Yeah, it's a very thin line to walk, isn't it, for the UK Chancellor? One strategist telling us yesterday that they want to see a budget that is both disinflationary but also invokes stability as well. So those key factors to your point on the inflation dynamics here in the UK, which of course have been stickier, particularly when it comes to services. Switching focus then to the big news overnight, broken by our team on Bloomberg in terms of the front runner for the Federal Reserve. We're learning that White House National Economic Council Director Kevin Hassett is now leading, and that is according to advisors and allies of President Trump. Talk us through the market reaction to that potential outcome.
So far, the markets seem to be taking it okay because he was already a front runner, and the markets were thinking that this job in May is going to go to a Trump loyalist. So it's not a huge surprise to the markets that Kevin Hassett has been put up as the #1 candidate at the moment. But the question is, it's almost a given that rates are going to be cut next year. And with a more compliant Fed chair, I think it is more likely that we will see the terminal rate go down to 3% which is what the markets are factoring in. Now, the key question is what happens if the Fed wants to push rates lower than that? If they go to, say, there have been suggestions made of 2.5%, which would be kind of ridiculous. If you think about inflation, core PCE has been averaging 2.8% this year, and you've got a you've got a real GDP growth of 2%. So that wouldn't argue for rates to be anywhere even at 3%, let alone 2.5%. So the Fed can have the rate that they want, but it is the front-end markets, front-end treasuries that will determine where the actual implications of the policy rate are. If you look at the 2-year treasury yield, it's holding around 350, and it hasn't meaningfully gone down below that level. And as long as the Fed continues to cut rates in defiance of inflation, I think that the markets will send out a very clear and loud signal to the Fed that, look, you can artificially lower rates, but you can't artificially engineer market rates, and that yield will come to haunt the Fed.
OK, Ven Ran, thank you very much indeed. Bloomberg's M Live strategist with the analysis on the Fed and the UK in the lead up to the budget. Ven, thank you. Let's check in on the Asian markets right now and bring in Min Min Lo, standing by in Hong Kong. Min Min, a decent session once again over in Asia.
Hey Tom, yes, it is a happy hump day here in Asia. As you can see, solid gains throughout the region. As you said, a lot of it is the tailwind out of the US, right? The repricing of the Fed rate cut in December. There is the Kevin Hassett factor as well. So you can see the Kospi up about 2.5% here. But we are watching some of the earnings that came out overnight after market close yesterday in China. Alibaba, big one, because yesterday it reported earnings that was better than expected. If you look at the revenue, 5%, that's a beat. The big standout was its cloud revenue up by 34%. But the reason why investors are punishing the stock now is because it saw the biggest profit slump as well on the back of the price competition with the likes of Meituan and JD. Interestingly, you look at the big rival Meituan, 5.8% higher. This is the biggest gainer on the HSI today. We are looking ahead to its earnings on Friday. We are in fact expecting a loss there. The reason why we're seeing this bounce is because there has been huge short interest on Meituan, but it seems like investors are now hedging or covering their short on the back of comments from Alibaba saying that their investment into instant retail is peaking already, and there's expectation that maybe the price war is going to loosen up from here on out, so lifting all boats in the sector. But flip the board, we are also watching SoftBank. This has been a very volatile stock. If you remember yesterday, it declined by about 10% or so. Today, recovering by 5.3%. Yesterday, it was because of the Alphabet story versus NVIDIA, but today we have the information reporting that OpenAI expects to see over 200 million paid subscribers by 2030, and of course, SoftBank heavily exposed to OpenAI.
Min Min Lo in Hong Kong. Thank you very much indeed. Coming up, President Trump dispatches top negotiators for meetings with Russia and Ukraine, but says tremendous progress is being made. Details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Trump says he has dispatched top negotiators for additional high-level meetings with both Russia and Ukraine, but would only be willing to meet both leaders when a deal to end the war is in the final stages. The president says Special Envoy Steve Witkoff is likely to meet with Russia's Vladimir Putin in Moscow next week. Trump says progress is being made, but trying to reach a deal is a complicated process.
People are starting to realize it's a good deal for both parties if they got to stop the war. They're losing a lot of people, a lot of soldiers, mostly soldiers.
In that 28-point plan that was originally leaked, there were some portions of that said that Ukraine...
Well, that was an original proposal, and then from there we went back and forth.
So when it comes to ceding land to Russia, is that still on the table or has that changed?
Well, they're talking about going land both ways and trying to clean up a border. You know, you can't go through the middle of a house. You can't go through the middle of a highway. So they're trying to work something. It's a complicated process. Doesn't go that quickly.
Well, Bloomberg's Russia government editor Greg Sullivan joins me now for the details on this. Greg, where do we stand then when it comes to negotiations right now? What does President Trump hope to see out of these meetings with both the Russians and the Ukrainians?
Well, there certainly is a flurry of diplomatic activity, and we have heard from President Trump that he's expressed a lot of optimism that a deal can be reached. There was, of course, a report that the Ukrainians had signed on to a deal, but Ukrainian President Vladimir Zelensky seemed to rebut that, saying talks were ongoing. It does appear that some of the differences have been narrowed, but sticking points remain. A big thing, though, that is outstanding is it's hard to see what kind of outstanding issues, settlements to those, could satisfy the Ukrainians that wouldn't be a deal breaker for the Russians, and vice versa. Major issues do remain, and it's unclear that they've made much progress on them, things like land and security guarantees. Nonetheless, the talks are continuing with Trump sending his envoy, Steve Witkoff, to Moscow. U.S. Army Secretary Dan Driscoll going to talk to the Ukrainians. He was here in Abu Dhabi talking with the Russians. So there are a lot of conversations ongoing, and the diplomatic process does seem to be continuing.
OK, and we continue to monitor that, of course, and any outcomes. Bloomberg's Greg Sullivan, thank you for that update. Meanwhile, Bloomberg is exclusively reporting that US Presidential Envoy Steve Witkoff, who will be meeting with Putin soon, advised Russia on how to pitch the Ukraine peace plan to President Trump, just days after Trump announced a peace deal in Gaza. In a phone call on October 14th that lasted a little over 5 minutes, Witkoff spoke with Putin's top foreign policy aide, Yuri Ushakov, to suggest they work together on a similar plan for Ukraine and that Vladimir Putin should raise it with Donald Trump. His guidance included suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in. President Trump was asked about the Bloomberg reporting while speaking to reporters on Air Force One.
That's a standard thing, you know, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. You know, that's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Coming up, Kevin Hassett emerges as a front-runner to be the next Fed chair. More on that Bloomberg scoop next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Here's what else to think about today then. 12:30 p.m. UK time. This is where the focus of the UK is, of course. It is the budget. Chancellor Rachel Reeves will be delivering that budget statement 12:30 p.m. UK time We will have, of course, full and comprehensive coverage and analysis in the lead up to, during and on the back of course, that statement. We'll bring you the full statement, of course, from the Chancellor at 12:30 p.m. and the analysis after that. At 1:30 p.m. UK time, we're going to get US jobless claims as we get signs, of course, of cooling in the job market in the US. Durable goods as well, that data is out. And at 7 p.m. UK time, the Fed Beige Book, given some colour in terms of Fed views at the regional level, at least. Talking of the Fed and leadership, Bloomberg has learned that White House National Economic Council Director Kevin Hassett is being seen as the front-runner to be the next Fed chair. That's as the search for Jerome Powell's successor heads into its final weeks. Hassett spoke to Fox News Channel's Hannity about this.
If he were to ask me to be Fed chair, then, of course, I would have to say yes, because I want to serve my country and I want to serve my president. But, we'll see how it goes. There are a lot of great candidates.
Let's bring in Bloomberg's Gilt. Jill, a key question then is how aligned Hassett is with President Trump. We know what President Trump wants, cuts from the Fed and a lot of them.
Yes, well, Tom, bottom line is that if Trump is ultimately looking for somebody who wants to push for more aggressive interest rate cuts, Kevin Hassett does appear to be that guy. You can take, plenty of his interviews with Fox News and others as maybe, sort of like a job interview for Fed chair. That seems to be something that, Trump seems to like here. And what we've heard from Hassett himself is essentially that he thinks that the Fed needs to be cutting interest rates more aggressively. He has said in recent days he'd be cutting interest rates now based on the data available to him. So if, again, given all of the context that we've seen over the last year and really beyond about how much Trump has really used the Fed as a punching bag, and Powell in particular for being, in Trump's view, too slow to cut borrowing costs, it would seem that if he positions somebody like Kevin Hassett as in that chair position, that he would have a stronger ally on the Federal Reserve.
What do we know about Hassett's position? What has he said about the Fed? What has he said about monetary policy?
Yeah, well, ultimately, again, what we're seeing is somebody that does seem like he would be much more open to pushing for interest rate cuts now. He's also criticized the Fed within the past few years, just saying that it allowed interest rates or inflation rather, to run up too much after the pandemic. So you do see a lot of those positions that are ultimately aligned more with what Trump and the Trump administration are really looking for here. One thing that I do have to caution, though, Tom, just in the scope of this search, is that we still know of really, including Kevin Hassett, 5 candidates who are up for this position. That does include some current Fed members, such as Michelle Bowman and Christopher Waller, as well as others, including ex-Fed official Kevin Warsh. So the field is still somewhat open here. We have had an indication from Scott Bessent that by the end of the year is when Trump would ultimately be looking to announce somebody. Of course, Powell's term does run through the first part of next year, so it wouldn't be expected to vacate the position right away there, but it could be that we get an announcement. And while Kevin Hassett is the front runner here, according to what we know, Trump also is, very well known for sort of surprise announcements. He could change his mind at any point here. So again, you're looking at those candidates right here, and we'll see where Trump ultimately lands.
Yeah, an important caveat. Jill, thank you very much indeed. Coming up, we continue our UK budget coverage as Chancellor Rachel Reeves lays out her plans to define the shape of this UK economy. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Wednesday. These are the stories that set your agenda. Budget day here in the UK. Chancellor Rachel Reeves set to present her highly anticipated tax and spend plans as she looks to placate both the bond market and backbench lawmakers. Stay tuned for our special coverage. And in pole position, National Economic Council Director Kevin Hassett emerges as the front runner to be the next chair of the US Federal Reserve. Markets rally as traders ramp up Fed cut bets. And President Trump dispatches top negotiators for more high-level talks with both Russia and Ukraine and says there is no deadline for a peace deal. That's the geopolitics. Let's get back to the markets. 3 days of gains across US stocks. A very strong session for Europe as well yesterday. Set today for a 4th straight day of gains in the US if the futures picture holds up. Of course, US futures pointed to gains of 0.3% after the S&P 500 closed higher by close to 1% yesterday. Nasdaq 100 futures looking to add 118 points. Here in Europe, looking to build on the gains yesterday. Again, a decent session for European stocks on Tuesday. Today, futures pointing higher by 0.7%. The focus, of course, very much on the UK and UK assets, how much of a risk premium has been baked in ahead of this budget today. FTSE 100 futures pointing to gains of 0.2%. The FTSE 100 has outperformed the S&P 500 year to date, but it has that international exposure, of course. Let's flip the board and have a look cross-asset. We will be focused on gilts when they start trading at 8, of course, and all the way through the budget, of course, but also the pound. 131 right now, close to 132 on the pound. We know there's been some short positioning around cable in the run-up to this budget. Currently up 0.2%, though, so some gains coming through for the pound. The 10-year stateside, just above that 4% level, 4.01. There was a Treasury rally yesterday, of course, on the news around the Fed, or at least the reports around the Fed. And Brent oil prices up by 0.4%. Let's get to our top story, then, of the day. It is budget day for the UK Chancellor. For all of us here in the UK, Rachel Reeves, of course, widely expected to announce a range of tax hikes targeting the wealthy to fill a £20 billion budget hole to avoid breaking those fiscal rules.
Markets know my commitment to the fiscal rules is ironclad. Some people say that we should just sidestep those rules, that we can borrow more without consequence by simply reclassifying areas like defence or education. But no accounting trick can change the basic fact that government debt is sold on financial markets. There are limits on the price that banks, hedge funds and pension funds are willing to pay for our debt. And we are competing constantly with other countries also selling debt.
And the market's full reaction to the budget may not be immediately clear until the official forecast of the OBR lays out its forecasts for the economy. To discuss this further and get more analysis on this UK budget, let's bring in Kit Rees, co-editor of Bloomberg Markets Today, and John Stopford, Managed Income Head at 91. Both, thank you very much for joining us bright and early on set today on a significant day, of course, for the finances of the UK. Kit, let's start with you, and you can lay out for us some of the policies that have been announced and what to expect. But let's start with this question around the central tension for this Chancellor between the bond market expectation and her backbench MPs.
Yes, so this is going to be a budget very much fraught with tension. So the bond market is going to be looking for a credible budget, one which is going to show that the public finances are going to be balanced, and they're going to be very much looking at the OBR forecast later in the day to see whether these are too optimistic and whether the whole budget can work. But then, of course, the backbenchers will be looking for things that are going to help people and help people with the cost of living. So Rachel Reeves's task is to stimulate growth, to bring down inflation, and also to appease bond markets. So it's a very hard task, and we'll see if she will manage it. But I'm sure someone will be disappointed. It's impossible almost to please everyone.
Well, that's almost guaranteed, isn't it? That's across this equation, there will be people who are disappointed, and maybe people who will be content with some of the measures. John, let's get you in with your view in terms of the market lens on this. What specifically are you going to be attuned to in terms of the language and the announcements from this Chancellor?
So I think coming into this, expectations got knocked back when Rachel Reeves moved away from income tax hikes. So I think the bond market's expectations are not that elevated, and they're probably more focused at the moment, assuming that she basically delivers some additional headroom, doesn't do anything that sort of smacks of a tax that unwinds things pretty quickly, like the pasty tax. As long as she doesn't derail the rate cuts that people are looking for, I think that's probably the thing that the market is focused on. If you look at how the bond market has been priced recently, it's relatively optimistic that we're going to probably get a rate cut in December, more rate cuts next year. So if she can pull off measures that don't push up inflation, put some modest downward pressure on growth, and meet her fiscal targets, then I think she's probably done about as much as we can expect.
You've listed a whole line of ifs there, which reminds us just how fine a thread she has to knit on this. Kit, on the inflation piece, that we know now through reporting that it's likely that the minimum wage is going to be going up, and pretty significantly as well. That is inflationary, is it not? What do we know about the details of this?
Yes, so the minimum wage is going to go up by 4.1% to £12.71 an hour. So it is a big jump. And in terms of it being inflationary, yes, and it shows that the tension between bringing down inflation, this big task, but also helping people and helping with the cost of living. So it's interesting that the Bank of England has always warned about these sort of secondary effects in the economy from higher inflation, and wage growth is one of those. And so it just shows that it's really hard to manage this, appeasing voters, but also making sure that some of the policies don't stoke inflation. So we'll just have to see how this plays out, whether employers will pass it on to the end consumer, as has been happening before when they've been faced with payroll tax hikes. So, yeah, overall, it just shows this kind of tension between getting it right for everyone.
John, does the hike in the minimum wage, does that concern you in terms of the gilt market reaction to that as an inflationary function?
Yes, to some extent. It's obviously, I think, expected. It's smaller than last year. It's against the background, I think, of a relatively soft labour market with private sector wages generally coming down. So I think it's probably about the level the gilt market can stomach or wear. And I think some of it, our view would be some of it's going to be seen through fewer jobs rather than necessarily price hikes.
PIMCO telling us, John, yesterday, and there's been a rally in the 2-year gilt and the front end of the gilt curve. The back end has been under pressure. PIMCO's saying there's further to go in terms of gains for the front end of the UK gilt markets, but they're concerned about the back end because of political instability further out for the UK. How do you think about that view?
I think it's a time horizon thing. I think in the short term, there is potentially a little bit of opportunity for a virtuous cycle, so falling interest rates and a budget that sort of does the job, doesn't upset too many people. I think longer term, clearly the UK has a lot of debt. We've had a fiscal rule, I think, for 28 years, and we've seen debt go from 37% to close to 100% of GDP. So fiscal rules themselves don't guarantee we're on a sustainable path. The market's concerned about that. So yes, but I would say if you look at what's driving the bond market, even at the longer end, it's more probably inflation expectations and rate expectations at the moment.
Would you buy the 2-year at this point?
Yeah, we have some exposure to it. We added a little bit when the market backed up. I don't think it's a steal, but I think the risks are tilted in your favour if you own short-dated bonds and medium-dated bonds in the UK at the moment.
On a sector-by-sector basis, where have we seen some reprieve? Reports that the banks will be spared an additional tax. Other sectors in focus? What's the latest in terms of sectoral impacts from this budget?
Yeah, so we'll be watching a number of sectors. So housing's a big one, especially on things which could be announced, like a mansion house tax and the wealthy end of the market being targeted.
That's on houses above £2 million.
Yeah, so yeah, targeting that kind of the wealthier portion of the market. So we'll be watching that. Also retailers, if there's any kind of impact, any kinds of tweaks to business rates higher, we could be looking at that. And banks, I mean, yesterday we already saw a rally in their shares on the reports that there's not going to be a bank tax. And it's also interesting because banks have been some of the best performers in the FTSE 100 this year. So it kind of shows that these gains might be able to continue if, we're not going to see that. But yeah, those are kind of the main sectors that we'll be keeping an eye on later on.
John, what is your current thinking about the Bank of England? Does December feel locked in for you as a rate cut from the Bank of England? And if so, how does that leave the trajectory into 2026? Markets pricing and expecting to get below 3.5%, but not until, I believe, April, May kind of time at this point.
Yeah, I think that's right. So the market is pretty much fully priced for December, and I think the Bank of England, unless we get some shocking news between now and then...
what would throw that off course, do you think?
Well, I think inflation is probably the big one.
Not the budget, but...
Well, I imagine the budget has been pretty well trailed now, so it shouldn't come as a huge surprise. I think they will look at things like the minimum wage increase and so on, but also whether there are other measures in the budget which we would expect that are probably aimed at trying to bring prices down, so things like the rail fare freeze. So, yes, I think they're likely to cut rates in December, and I think then it's the beginning of, we will see a continuation of rate cuts towards neutral, wherever that is. We think it's probably closer to 3 than 3.5%, 4%. So particularly against the backdrop of an economy that's looking pretty soft.
And maybe a more dovish Fed as well will give the Bank of England a little bit more space.
Yep.
John, in terms of, do you have conviction on a conviction view on the pound at this point? There's been some short positions being built up against sterling in the run-up to the budget.
Yeah, I think that exactly that's right. So, the market's gone into this relatively pessimistically priced, particularly post the decision to walk back on the income tax hikes. I think looks like the Chancellor can probably thread the needle, even though it is a difficult balancing act, as you've said. And given that the market has gone into this a bit short, I think there's room for some positive surprises on the pound as well.
OK, interesting. Room maybe for some upside for the pound.
Yeah, I think it's priced in some bad news,
yes.
and if we get some OK news, that's probably good enough for now.
OK. Kit, before we wrap this up, just remind us in terms of the headroom story, because this had been a perennial question for the Chancellor when she left herself just £9.9 billion in terms of headroom, and the question was, why such a little slither that you've given yourself? And she was convincingly kind of trying to convince us that it was all about growth, and we get that, and that headroom would expand. What kind of level of headroom were you expecting this time around?
So probably somewhere in the region of £20 billion. That's probably what markets are going to be happy with. Anything more, that would be great. But anything less, we could see a little bit of a negative reaction in the bonds and the forex market too. But basically, yeah, the bigger the headroom, the more room she's got for the economy. If there's any kind of shocks, they could withstand it better. And also if there's any kind of gyrations in markets. So yeah, the bigger the better. But it's yet to be seen if.
OK, but 20 billion is the number we're looking at for now, and we'll see how much that is adjusted with the statement, of course, later today. Kit Reeves, thank you, of course, very much indeed, co-editor of Bloomberg Markets Today, and John Stopford, thank you for coming in bright and early this morning. Managed income head at 91, of course, on a busy day for John and the team. UK Chancellor Rachel Reeves will, of course, deliver that budget at 12:30 p.m. today in London. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. It does not stop there. The opening trade will break down the numbers, and key business and political voices will join for their budget special. That is tomorrow morning with all that analysis. Coming up, showing off their AI credentials, we're going to be talking to the CEO and co-founder of Legora about the adoption of artificial intelligence in the legal world. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the race to compete and win in the AI for legal space is heating up, with Europe's Legora recently raising a new round of funding and rapidly growing its law firm customer base. The Stockholm-based company, valued at close to $2 billion and backed by the likes of General Catalyst and Iconic, says it now has 550 law firms and legal team customers in more than 50 markets. It's also expanding here in the UK at a time, of course, when the government's growth strategy is under the spotlight. Legora CEO and co-founder Max Junestrand joins me now. Max, thank you for coming into the studio.
Thank you so much.
We want to get into what you guys do and the growth that you're seeing and what you're providing your customers with this valuation now at close to 2 billion, 1.8 billion, but we'll round it up for the sake. You're getting close to that 2 billion mark. But on a big day for the UK, I want to start with clearly legal services in the UK is a huge industry. You've got an office here.
Yeah.
How are you thinking about UK business? Is the UK a good place to do business still, or do some of the missteps of this UK government, as their critics would describe it, put a dampener on the prospects in the UK?
For us, it's the biggest market in Europe by far. And we started the company in Sweden only 2 years ago, and the UK was our biggest growth market. So we've opened an office, we're close to 50 people, and we've also made the lap over the pond to New York. And of course, many of the biggest and the best firms have offices internationally.
Yeah.
We just started working with Linklaters, 40 offices all over the world. And I think everybody overestimates sort of how much energy it takes to really work with AI. It's a huge change in how you work. It's a transformational period and an existential crisis that some of these law firms are now going through.
But is the UK still a good place to do business and invest?
The UK is fantastic. We're growing like never before. UK is by far our biggest revenue market today. And I think if we look at how big our offices will be, we're scaling out of our WeWork very, very quickly. Getting our own space, I think, will be about 150 by the end of next year.
If there was one policy this government could enact to help a business like yours, what would it be?
So I think, AI regulation all over Europe has been a little dicey and difficult to work with. I think more, similar takes between Europe and UK would be good. Mm-hmm. Also, all of the visas has been difficult. We have so many talented people from the rest of Europe that we're sending here. And some of those new constraints have been quite, slowed us down.
Interesting. Talk to us about what exactly you guys do. It's an increasing competitive market. You've got Harvey AI in the US, you've got Robin AI here, Luminance as well. What is the proposition? What are you doing for your customers? What is pushing and driving the growth that you're seeing?
So we're helping lawyers solve end-to-end tasks with AI. And we founded the company in 2023 off the back of the release of the GPT 3.5 models. And since then, the sophistication in use cases that we help lawyers solve have grown exponentially. So it maybe started in sort of summarizing documents or translating things, but now firms are leveraging Legora to do end-to-end due diligence. They're using it for chronology creation. And you're sort of right on the spot that legal was one of these sectors that when LLMs came out, there was a lot of eyes on it. It's about coding, customer support, and legal. And so in these 2 years, I think we've seen an explosion in adoption. And I think that's really important. It's not only that law firms are putting out a press release saying, hey, we have some new fancy AI tool.
They're actually adopting
They're actually using it. And I think that's very important.
Are European and UK firms slower to adopt than their US counterparts?
No, I don't think so. And I think the reason why is many of the European markets, including the UK market, is very competitive. So firms are looking to get every single competitive advantage that they can. And they're seeing that technology and AI will be a core part of their competitive advantage sort of going forward. Many of the law firms have their own AI strategy, innovation strategy, and those are very, very serious.
Give us some details in terms of growth. What level of growth do you see now? What do you expect into 2026? Can you give us annual recurring revenue targets or what the numbers are looking like right now for you and the team?
So we'll be able to share some numbers on that later this year. But we started 12 months ago. That was sort of when we went into general availability, and we were 30 people in Stockholm. Now we're well over 220. We've grown the client count from less than 100 to over 550. And most importantly, we've made the move from mid-sized European firms to some of the biggest names in the world, like Linklaters, Clear Gottlieb, Goodwin & Procter. And the level of sort of enterprise that's expected in those client relationships is very, very different.
What is the impact on jobs? Which legal jobs are most at risk from your technology?
So, I think what it means to be a lawyer in the age of AI will be different from what it was to be a lawyer before, just as being an engineer using AI is very, very different. If you're sitting in a law firm and all you're doing is reviewing documents and you're looking for sort of red flags, then I think you're either one, going to need to seriously lean in to learn these tools so you can sort of prove your value using them, or two, maybe you should think about what other tasks are possible to do within that firm. But I think law firms are facing a challenge in terms of how do we grow the next generation of talent now that they can leverage these tools, because it will be a client expectation that firms leverage these tools. And increasingly also on the in-house side, big banks, insurance companies, pharma, they're looking to leverage AI as a cost reduction mechanism. So I think everybody's sort of rushing to how can we use AI more effectively, and what use cases are we going to apply it for?
So as your tools and other firms' tools empower internal teams, does that mean less business for those external providers? Is that the dynamic going forward?
So our headline is collaborative AI for lawyers. And the reason why we say collaborative is, one, you're collaborating with the AI, but two, we are actually building the collaborative layer between law firms and their clients. So never before has law firms been able to take their expertise and scale it. Right? Because it used to be based on the billable hour, and you had to do 10 hours to do 10 hours of work. But now, if you really know something, you can build an AI workflow, and you can scale that to many of your clients. So a month ago, we released the Legora portal, which sort of helps law firms actually make this business transformation. Because inevitably, if you're using tools to be more efficient, you need to look yourself in the mirror and say, hey, are we using more or less hours here?
OK, Max, thank you very much indeed. Really interesting in terms of some of the evolution of this technology, particularly with that focus on the legal space. Max Junestrand, CEO and co-founder of Legora. There's a lot more coming up. We're going to break down some of the moves around UK assets in the lead up to the budget. Stay with us. This is Bloomberg. Let's get a breakdown in terms of what has been happening as we lead up to the UK budget. Of course, 12:30 p.m. UK time. The pressure has really been on the long end of the gilt curve, the 30-year. And just look at the gap that's opened up versus the US and Italian counterpart. Look at that. Italian 30 years yielding 4.32 versus 5.3 for the UK. What a huge gap between the borrowing costs long term for both Italy and the UK. The UK presented by the white line. Blue is the US. And down at the bottom, look at that, Italy. This is partly down to political risks here in the UK. At least that is the view from the team at PIMCO. I was speaking to Rupert Harrison yesterday. He is cautious about the long end, doesn't like the long end at this point, but does see opportunities at the front end. And indeed, you have seen a rally in the UK 2-year on near-term expectations, of course, of Bank of England rate cuts. Let's flip the board and have a look at what's happening with the pound. We have seen these short positions. Here's the story in terms of pound versus the euro, the biggest trading partner, of course, being the European Union. We flipped on quite quickly from that. But what you've seen is euro strength putting pressure on the pound. That is a challenge, of course, when it comes to that dynamic and that trading relationship in terms of the UK and Europe. And that is the blue line there in terms of the pound versus the euro. More broadly, against another basket, the pound is actually holding up. Let's flip the board and see a look at the short positions building into the pound. This is concerns about borrowing costs, of course, concerns about spending coming through from this UK government. You have seen those positions, those bearish wagers on the pound being built up in the lead up to this budget. Our previous case from 91 saying there could be an opportunity actually to buy the pound. He thinks maybe some of these short positions will have to be washed out. So just a view there in terms of the pound. To watch, of course, UK assets, some of the risk premium that's been building in, and the divergence we've seen between the 2-year and the 30-year gilt story here in the UK. We're going to have special coverage, of course, of UK Chancellor Rachel Reeves delivering her budget, 12:30 p.m. today in London. For a different take on the budget, check out the Mary Talks Money podcast. Bloomberg UK Wealth Editor at Large, Marion Somerset Webb, gives her take on your money and the world of investments every week. Get that in your podcast, of course. The opening trade, though, is up next. Stay tuned for that. This is Bloomberg.